Hi, everyone. Good morning. Thank you for joining our webinar today. Today, we're going to be discussing applications for non-dilutive funding, but first, we're going to be talking about the current financial climate and its effects on fundraising overall. My name is Ahava. I'm the marketing director at Argentum, and with me is Ishai, our CEO, who I will introduce further in a brief moment. First, I want to give you just a general idea about Argentum, what we do, what type of company we are. So Argentum is a consulting firm specialized in securing non-dilutive funding and R&D incentives for deep tech companies across the EU and associated countries. Established in '99, the company is currently divided into 3 departments: business development and marketing, strategy, and a consulting and writing team. We have years of experience with applying for grants and securing funding for, as I said, deep tech companies in the EU and in Israel as well. And we have also had some experience with consolidating large-scale multinational consortia. Without further ado, I'd like to introduce Ishai Shamir, our CEO. Ishai has been the CEO of Argentum for the past 4 years, following 8 years as a grant consultant and team leader. He holds a master's degree with a double major in economics and business administration with a special focus on finance from the Hebrew University of Jerusalem. Ishai, thanks for being with me today. Take it away. Ishai, you're still muted.
That's a problem. Resolved. Thank you, Ahava, for introducing me and introducing our company. I want to add more details to my background before we dive in. I started my academic years around the subprime financial crisis when I was just studying for my bachelor's degree in economics. And I saw all the professors for economics in the Hebrew University just super excited about this event and telling us how exciting it is for us to be studying economics at this time. So I witnessed firsthand from the academic side what a financial crisis can do and how it affects decisions of companies and governments. We had a lot of focus on at this time on learning how governments should react to a financial recession at this scale. But our communal or joint experience of financial recession, so global financial events is also dated back to the dot-com bubble that exploded around the turn of the millennium at around 2001. Our company actually began during this time, and one of its major challenges at this time was dealing with all these technology companies failing to reach the market or losing their value dramatically after lofty evaluations and funding rounds, and how the government had a crucial role in saving them. Our experience with financial crisis also stretches forward to the corona pandemic, the COVID-19, in which we saw a very quick response from governments in saving companies during this time, saving companies and also assisting the people. And we also saw the European Union giving support to countries at distress. So I can see that now, after witnessing 3 major global recession events, we can freely discuss and try to evaluate what is happening now.
Mm-hmm. Well, thank you for that opening statement, opening words. So yeah, it's definitely a topic that's discussed and spoken about, the current financial climate that we're in globally, which is really quite something that everyone is dealing with on some level due to COVID-19 and the aftermaths of the pandemic. I'm curious though, because we did experience during the pandemic like a peak as far as like investments in the tech world, especially. It seemed as though the tech world was just immune to the difficulty that maybe the rest of the market was going through. So what would be your comments on that?
Well, first, I would like to just zoom out and try to understand what is happening. You said correctly that we are witnessing an aftermath of the pandemic in which we saw counterintuitive peak in investment in high-tech companies. But let's focus on what is happening now. The Corona pandemic was beneficial to software companies, but it really damaged everyone that was relying on supply chains, so physical supply chains, actually sending stuff throughout the world. Factories in the global around the world, but mostly in the factoring warehouse of the world, the Far East closed down, and the very building blocks of most products. The production of these building blocks have abruptly stopped, and this is still causing delays and disruption of supply chains. There's disruption of supply chains. Also, with the war in Europe, contributes greatly to, as you learn in introduction to economics, it automatically contributes to steep rise in prices of everything. Now, the war in Europe, with the major effect or major positioning of both countries in this conflict on the supply chains, is giving its effect. You see that Europe and other places in the world are relying on the supply of natural gas from Russia on one side of the conflict. On the other side of the conflict, Ukraine has been a source for very basic materials for food production, grains for in several types of grains that are produced in Ukraine. Also, a lot of developers, software developing teams in Ukraine that helped companies in getting to their R&D goals are now less effective. Also, the ability to sell products mostly to Russia and counting on Russian customers have been difficult for companies. So all of this contributes to steep rise in prices. Steep rise in prices means that your currency that you had in your pockets until now is less, can buy less. And what means, in other words, inflation. Inflation must force governments to raise its interest rates, which makes loaning more expensive. So we have like a snowball of effects that currently we don't see the end of it, and we are not sure if we are at the end of it and getting better, or we are going towards a deeper recession in the future. And what does it say about tech, about innovation, about research and innovation, and about their funding? So, as you said, Ahava, and we can show it in the slide that we prepared. We've seen a peak during the pandemic well, the second year of the pandemic, during 2021, a very large peak in VC investments. This was mostly for, and we saw large valuations from companies, mostly in the communication areas that could well during these lockdowns. And now we see these peaks cooling off, and we see a shift in the trend going back to the pre-pandemic years. What makes companies that add high valuation so far dealing with the cases where they will need to have the next round with devaluation. The next round will probably be at lower valuation than current, and this goes either for public companies that are listed on stock exchanges, and also private companies that are not. So the easy money that companies got from VC so far is not available. So at the bottom line for a company, whether it's listed or if it's private, it's not a good timing to start a VC round or funding round with equity, because VCs are not sure about the future, and even if they do, you will have to raise your next round with a lower valuation, which is not very good for them. We always say in our pitches that there are 4 channels to get funding for innovation, and so VC is the one, but banks are the other. Banks or investment banks. Now, as I said, the interest rates are now rising. In the US, I think it's almost 2 points rise, and in Europe they have a rise of 0.25%, which is the steepest rise in interest rates of the European Central Bank in the last 11 years. So we see the banks raising their interest rates in order to fight the inflation, but this makes loans more expensive.
Mm-hmm.
Now, the next avenue for funding would be just to sell products to customers. And then if your customers are in the same financial troubles as you are, then you should not rely on this cash flow. So we are actually painting a pretty dismal picture,
Yes.
but and this is no matter to laugh about, but we see our job is to be optimistic, and we see that actually governments have not witnessed the same slowdown. And actually, when there is inflation, and there is an inflation of 8.1% in Europe this year, which is far more than the target inflation rate of 2%, governments are actually getting more money or cash flow in taxes, because value-added taxes are higher. So governments are not very affected by the cash flow of the governments, is not very affected from this, and this should be their role. And this is their role, and we saw it in the past, to come up with solutions. And we saw this solution also in the world of research and innovation.
Mm-hmm. Kind of a counterintuitive thing to say, like, or understanding, I guess, that we could be experiencing inflation, but for a government that actually might be something that would strengthen its financial stance on some level.
On some level, Yes, governments are, yes, and governments' decisions are all sometimes affected by politics or interests, but the neutral economic perspective should be to reduce taxes and to help with funding incentives, and I think that Europe has shown us that research and innovation is their top priority in this case. And this is the next slide that we prepared. Okay, so this is what we saw in COVID-19. This is the response of Europe to COVID-19. They were in the outburst of COVID-19 at the beginning of 2020. Europe was working on the next 7 years multi-annual financial framework, and so it affected their decisions, and we saw that a lot of funding was going into recovery from the pandemic. Actually, 2 trillion euros is going to be spent by Europe in the next 7 years. 806 and 807 billion euros are going directly into recovery action, and they're going to recover by investing more in areas that might take us out of financial recession. So innovation and digital, you see the first line on the bottom with 150 billion euros that is going to be spent or to incentivize research and innovation in the digital transformation of Europe. I want to skip to natural resources and environment, which is always very important to Europe, with almost a lot, 25% of almost 25% of the budget. Cohesion, resilience, and values includes support for weaker governments in the EU that can issue regional funding schemes for companies, and smaller amounts for border management, security, defense, etc. So we see that happening. Also, I can tell you that during the COVID-19 pandemic, governments had emergency funds for high-tech companies that could not show financial stability for 12 months. So they got very nice support from governments. We saw immediate response of grants tailored to develop solutions for coronavirus, and also we saw this plan. Actually, we saw cash flow coming to countries, and then countries giving up the grants as they see fit. That's what I can say about the response we saw so far. Currently, we haven't seen a response tailored to this financial crisis from the EU, but we're starting to see governments, local governments in EU countries responding.
Okay, thank you. So this is somewhat optimistic to see that a very significant chunk of the budget is allocated to recovery post-pandemic. Very significant. And I'm going to ask you my follow-up question to this, which is, if you were a decision maker or CFO in a startup at the moment with the current climate, what would be your next move? How would you justify that move financially?
I'm a little biased because my role is using grants, but I do believe that this is, and actually this is not only me saying. We have a lot of calls with CFOs that didn't want to focus on non-dilutive funding in the past because they were good with the VC funding, and their customers gave them decent cash flow, and they could operate, and they have a solid plan of funding rounds. But now this disruption have made them turn back to non-dilutive funding. Non-dilutive funding is actually great in this area because it gives you time. It gives you time for the world. It gives the world time to get out of this recession and to make VC funds, the VC option good again, so you can continue with your plan. But the grants give you funding that will mostly cover your ongoing R&D, which is in most software companies or innovation companies, the greatest expense in that they have. So it will help you fund them until the world is ready enough to pick, and you can continue with your original plan. So this is the first value. Another thing that we do believe can happen is applying for grants even before winning the grants, and applying to high value grants or strategic grants to develop something that could really change the game or change the positioning of a company, raises the value first and foremost. So the opportunity to win this grant can raise the value and can put you in a better position for the next venture capital round that will come up after the recession ends. So this is something that I will do as foresight if I were to make the decision. Again, grants provide some sort of stability, because if the government signed on this, it will provide the funding. Also, you can really use grants to help your major customers, because you can create a collaborative project with your customers and then not lose them during this time. So you can the grant can fund their activities in order to integrate your product in a client, and then
help both parties.
Help both parties and make the cash flow you expect for them come sooner. So this is what I would do if I would be in this position. It could serve as a lifeline or time, just a time barrier or time buffer for a company.
Mm-hmm. Okay, interesting. I can't help but wonder also. It doesn't sound like it's the most optimistic picture, not with bank loans and not with the VC investments. So if more and more companies are turning to government funding, programs which happen to be competitive in the first place, don't you think that would really make much higher competition? I mean, I don't think we have enough people in our webinar today. Even if everyone went and started applying for grants, that would obviously not affect the competition. But overall, I assume that more and more companies that are experiencing some form of crisis right now financially will turn to these sources of funding. So what would be your response to that element?
First of all, you are right. It doesn't matter how many people in this webinar. It's I'm guessing people doesn't have to be in this webinar to understand the basic of what I described. I think the best way to battle competition in grants is via multiple submission. It means we do not want to put all our eggs in one basket and saying, okay, the EAC accelerator will save me, because it's going to be more and more competitive, especially now. But try to diverse your risks and try to apply to as many grants as possible. As we saw, there are a lot of grants that are out there, and they just need to be discovered, and you need to be mastered, and then you need to apply them. And this raises the chances of success dramatically. And we saw it, our clients are winning more and more grants by by not applying to the most obvious low-hanging fruits grants, because they are not low-hanging fruits. They are, when you try to reach them, they go higher, higher to the canopy, and kind of hides there. So this would be my advice: how to combat competitiveness of this grant, and understanding that applying to one grant might not be the resolution to what we are looking for here, to this extra time until the market is going back on his feet.
Well, thank you, Ishai. As the person in charge of the marketing for Argentum, and without making this any kind of pitch whatsoever, I would like to just strengthen that point that you mentioned about creating those partnerships and that collaboration, potentially with clients that already are implementing your product, but just having grants be an avenue that's not only about the funding. The funding is definitely a very important element, but there are so many other added values that, in my opinion, that element of like monetary value is secondary. The ability to sort of branch out, explore your innovative trajectory and your R&D trajectory. Good time also to pause after such a crazy 2 years, to pause and sort of reevaluate the next steps and how companies view their business development strategy. And we are biased, but we definitely have seen also the results and the high quality of partnerships that can be formed by pursuing this avenue. So I want to thank you very much for giving us this overview. Not too brief. I was going to say brief overview. We've been talking for about 25 minutes. But we hope that this maybe gives a little bit of our 2 cents regarding this period of time that we're in, and maybe light at the end of the tunnel. We know that a lot of companies are struggling to get back on their feet, and we would be happy to discuss potential collaboration. I'm actually gonna just leave my email here on the screen in case someone would like to follow up. And I would be happy to connect you all with the relevant people in our company. We thank you very much for joining us today, and thanks again, Ishai, for your time. And
thank you for organizing this, Ahava.
My pleasure. And follow us on LinkedIn. We have events all the time. You can also check out our website, argentumconsultants.eu. We update events happening, webinars, about 3 a month. So if you're interested in learning more, if you want to know about specific grants that have to do with your specific field, then you can definitely tune into our webinars and learn more. So we hope to see you, hear from you, and wishing you a lovely day ahead and the best of luck. Thank you.